let you know what you're in for. So if you don't mind, I'd like to tell you my story a little bit first. My name is Cory Gayman. I am local-ish from El Dorado Springs. I grew up, born and raised there. Went to college in Springfield at Missouri State and started growing my CPA firm back in 2014 after some years at a CPA firm there in Springfield. I am a follower of Jesus. That is very important in my life. It leads me to stay on the right path that I need to grow my family, to lead my business, and to care for my employees the way we should. Professionally, I was in Springfield for 7 years and learned a lot at a small CPA firm there, at a small business, watched a lot of small businesses grow, advised a lot of businesses, saw a lot of mistakes, saw a lot of successes. In 2014, when my little girl was 5 weeks old, we decided to quit my job and start my own business. Kind of a crazy idea, but we did it. We took that leap of faith, we moved back home and started the CPA firm that I built, and that was 10 years ago now. So she's now 10 years old this month actually, and it always reminds me of what we did back then to get to where we are every time she has her birthday. I do have 3 kids, and my oldest is Joseph, Morley, and Ren, 11, almost 10, and 7, and we are having a lot of fun. We're in that stage where everything is an adventure with them. Along the way, we have grown the offices. We now have 7 offices across 3 states. So we do have Springfield, Bolivar, Stockton, El Dorado Springs, Nevada, Girard, Kansas, and Tulsa, Oklahoma. So I'm really proud of my team. I'm proud of where we've come. But that's not to say it didn't come with some adversity, some struggle, and a lot of hard work along the way. So that's what I want to walk you through tonight, some of those lessons that I've learned, some of the things I should have done different, and just some general tax, accounting, record keeping, all those topics that you want to touch on. I did want to ask before we get moving forward so that I understand where you're at. We don't have too many people here, so I think we can be very interactive. If you would, please indulge me. So I'd like to know, what is your current level of your business? Is it not started yet? Have you been in it a few years? Are you 10 plus years? What's your level right now?
Very beginning.
Very beginning, okay, just thinking about it?
No, but starting to get a couple of different contracts.
Okay, very good. What about you guys?
Well, it's been off and on.
Okay.
Not ever been anything where you really push.
A little more of the H word, hobby, possibly?
Yeah.
It was.
Okay, I'm gonna get into what a hobby is in a few minutes.
Oftentimes paid, so.
Very good. And what about you guys?
I guess beginning was going on for a few years, but
Okay.
it's nothing that's major.
Excellent. Well, my discussion is really geared toward that first few years or not started yet. And so I think, please, I would like for this to be discussion based. I'm gonna ask some questions. If you have questions, just stop me. We'll talk about them. That's really what's cool about having small groups like this, is that we can do that. So I want to move that straight into the big question: what does it mean to be in business? What is a business? You guys kind of maybe aren't sure what it is at this point, but what is a business? Well, the IRS defines it, which is sometimes what we need to know, is as that you are in an activity intending to make a profit. Okay, that's kind of the boiled down, what is a business? You're performing an activity, sales, service, manufacturing, something, intending to make a profit, okay? So that leads into, well, what if it's just a hobby, okay? I've got maybe my daughter and I make bracelets. Maybe it costs us 50 cents to make one and we sell them for $5. And then suddenly maybe we sell 1,000 of them at the farmer's market. What is this? Is this a business or a hobby? What is it? Well, the IRS says you're making money. I don't care what you call it, that is a business. And if you declare it on your tax return as a hobby, you still have to pay taxes on your profits, or actually on your full income if it's a hobby. If you want to take the steps forward and put it on a Schedule C and call it a business, which is really what it is, then you can take off your deductions as well. But you do not have to go through the complicated, intense legal setup to be in business. You can be in business just with your personal name and your social security number, and that can go on your tax return as a Schedule C. So if you have a small farm at home, but you never incorporated it, you never got an LLC or anything like that, you're still in business. It is a business. the reason I want to start there is because we move forward and everyone thinks this is the complicated part with what kind of entity do I need, what kind of setup. There's all different types of entities. I'm sure you've heard some of these terms. Allow me to go through them. So you could be a sole proprietor. That's kind of what I described a moment ago, where it's just your name, social security number. Okay? That means you're a sole proprietor, you don't have any partners, and you didn't incorporate with the state. You're just a sole proprietor in business. You could be an LLC. Well, that's a legal designation, limited liability company, to where when you're in business, you might have some protection from the activities of your business legally. Well, that might be a good idea for you, possibly. It could be an LLP, that's a limited liability partnership. It could be an LP, it could be an Inc. Then, those are just the entity setups. Then what type of taxation are we going to be? An S corporation, a partnership, a C corporation. This can get very complicated. But I want to present to you that being in business is not complicated. You just get the best advice as you move forward to get it set up the way that works for you, okay? Maybe the simple setup is best for you. That's very possible. Maybe you've got big dreams of growing a giant business with 1,000 stockholders traded on the stock market. Well, then you need a C corporation. So it can be as complicated or simple as it needs to be for your situation. What I would advise in those times is consult with a lawyer, consult with a CPA, even just a tax preparer that's not a CPA. They have a lot of knowledge as well. But get yourself some good professionals around you that can help you walk through what's best in your situation. It's not a one-size-fits-all, and the internet has a lot of good information, but it's not all right, I promise. So it can be overwhelming as well. And each state has its own laws as well. So that's another complication to it. If you're going to work in multiple states, that's a whole nother level of, do I need to register in every state? Okay, so it can be complicated to get it set up, but just being in business is simple. You're making money, you have a profit, you're gonna have to pay taxes on it. That's simple, okay? What the biggest takeaway for me on business setup is that you need some teamwork between a lawyer, a tax professional, probably a CPA, but a tax professional of some sort, and then maybe an investment advisor, because your goal here is to make a lot of money. And so an investment advisor will help you with your business entity setup as well. They'll give you the investment perspective on how we should do this and maybe what we should do with our money along the way, because you're probably going to get a paycheck. And how do we need to do that? So before I move on from business setup, does anybody have any questions here? This is a pretty hot topic that people want to talk about in general. Does anyone actually have any legal setup right now, or is everybody prior to that stage? Do you have an LLC?
Yeah.
Okay. And did you set it up, or did an attorney set it up?
No.
That's good.
Yeah.
Very good, very good. There is a line of what we can and can't do as a CPA and what's legal work, but it's good to have the opinion, at least, of the lawyer, tax professional, and the investment advisor, because we all three have different opinions on the same topic, and you really want to meld those together into your situation. So, okay. All right, we'll move forward. Next thing I want to talk about is the big ugly word that everybody does and doesn't like, taxes. We all know taxes exist. We have to live with them. Yeah, we get better roads, supposedly, stuff like that. So what are some different types of taxes? There's a bunch of them. Give me some examples.
Personal property.
Personal property tax, yes, that's a county tax.
Tax.
Income tax, that's the big one.
Sales tax.
Sales tax. States have income taxes as well. Some of these are state level, some are county level, some are federal level. We also have use tax. We have unemployment tax, FICA tax, Social Security, Medicare. And then one that is really misunderstood is self-employment tax. And that's one that hits you immediately, that no one sees it coming. That's the one we warn people of the most. So what is self-employment tax? You might know what self-employment tax is. You've been in for a while, Amber?
No, I actually
No?
no, because I just got the LLC
Okay,
set
very
up,
good,
so
very
yeah.
good. Self-employment tax will hit anyone that is filing their taxes on a Schedule C. Okay? Schedule C is on your personal tax return, and it's just a schedule that's attached to it. The net profits of your business, and we're going to get to what that is, but the net profits are subject to self-employment tax. Okay? Self-employment tax is your share as a small business owner of Social Security and Medicare. And it's doubled from what employees in the world have to pay, because you're now the employer and the employee. Okay? So if maybe you all still have a W-2 job. If you have a regular job with a W-2 and you look at it, and you're looking at it, okay, I see federal income tax was taken out, state income tax, and then what's FICA or Social Security and Medicare? What's that? That is that version of self-employment tax. Everyone pays into it. There you're paying in from your wages or your paycheck. Over here you're paying into it from the net profits of your business. Now on your W-2 though, your employer is paying half and you're paying half. When you're the employer and the employee, you're paying both sides. So it's really 15%. So let's say you make $10,000 profits on your small business. 15% straight to this tax. And except for business deductions, you cannot get away from it. All your personal exemptions, your things with your house mortgage, stuff like that, your personal stuff does not affect it. It has to be paid. And so I've seen small business owners get into maybe the first year they didn't make any money and it was okay because they bought some equipment. They get into the second year and wham, they made $10,000. Well, suddenly that's $1,500 that we have to pay. And they're used to getting refunds when they had a W-2 all these years. Now suddenly they have to pay tax and probably short on cash because they only made $10,000. What if you made $100,000? Well, that's $15,000 right away. And it's individualized. So if each of you, husband and wife, have a small business, each of you have to pay on your self-employment tax, okay? It's individualized because supposedly, it's going into the Social Security account, the Medicare account of the government. They're taking care of it for you and going to give it back to you when you get to that age, right? That's the idea. But that's why it's individualized. So I will see a lot with my farmers who maybe have a big loss, but the spouse starts a small business. Well, they have to pay taxes even though the farm has a big loss because that's on one spouse, the small business is on another. Okay? This is one that when you start your business and you're talking to your tax professional, say, hey, I need to be ready for it. I need to know what it is. I need to understand it.
Is that when they say that you
Yes.
should do them quarterly to avoid that? I've just sometimes
Potentially,
heard.
so you're not avoiding the tax.
Mhm.
You're just paying estimates.
Mhm.
So, and that's a good question. So it nets in with the rest of your taxes for your tax bill at the end of the year, so to speak. So it goes over there and you might owe some income taxes too, because that same money is also subject to income taxes. So if you're in the 12% bracket, we get 15% here and 12% here. Now, that one gets to be reduced by your standard deduction and your mortgage interest, your itemized deductions, maybe some child tax credits possibly. So that helps with that one. But that money is effectively about 30 to 35% taxed because it goes there, and then it's going to go over to Missouri, and they're going to want their cut too, 3 to 5%.
Does that change any if you're already considered a retiree on Social Security? when you have a business?
So that actually complicates it more.
Oh, tell me, Karen.
So it, she's asking if it changes if you're already on Social Security. Well, what happens is if you make earned income, which that's a topic or a buzzword, right? You have activity and you earn the income. It's not investments. Then that money actually goes, the Social Security that you're getting, they don't really want you to do that. So your Social Security is going to become taxable as well. When if you didn't earn any money, it would be not taxable. Now your Social Security becomes up to 85% taxable, and you still have to pay that self-employment tax. You do not get out of it. If you have an active activity, where it's a service or a sale that you are doing as a job, you have to pay it, even if you're already on Social Security, yes. And it could negatively affect your Social Security payout, and it can make it taxable. So that's the big surprise when someone that's already getting Social Security starts a small business. Okay, this is great, and then we made some money. Okay, well here's taxes from it, and then oh by the way, $25,000 of your Social Security is also taxable. That does surprise people. So some tax planning there and some trying to look forward and see what the year looks like is a very good idea in your case.
Is it based on an amount that you make a year?
Which
I know, cause I'm the one getting ready to hit that age, and
So if he limited his
Profit.
profits
Right.
to a certain amount.
So the Social Security kind of has their own charts of when they're going to start reducing what they pay you, and that's I don't want to say it's secret, but that's something that they have on their site. But as you make money, it goes through a calculation. I think what's the total? You can make up to maybe 20. I can't remember the numbers. They change them a little every year to where it doesn't really affect it. But once it starts getting over that, you're starting to make that Social Security taxable also. And I think it gets pretty high before they actually start reducing your Social Security payments.
It's something to be aware of, for sure.
But it's something to be aware of for the tax part, because your Social Security likely doesn't have any tax held out. You can change that. If you foresee, I'm gonna make $100,000 on myself and on my small business this year, you can call Social Security and say, hey, I know it's gonna be taxable, can you go ahead and start taking out taxes, and they'll pay those estimates in for you. Okay, I do wanna go back to your question about the estimates. So those estimates are on your entire situation, okay? So what the best idea is to plan each year and try to look forward each year to see if you're going to have a profit. Then you try to estimate what those taxes will be. Do you guys have kids?
Yeah.
Okay, that usually helps quite a bit because you get a big credit for each child. So the reason I tell you that is because everything does net together. So I don't want to say, okay, we're going to make $50,000 in our small business, we need to pay tax based on that. Well, it's still going to net in with your other income and your other deductions and other credits. So you really want to do the whole process first, see what the bottom line is, and then maybe pay in. But yes, each year, what we do at our firm is we will use the tax from that year, and if you owe taxes for the year, say you owe $10,000 for the year, we'll give you 4 quarterly payments to make for the next year, and just be $2,500 in that case, so just divide it by 4. So it's not reducing taxes for sure, it's just paying
Being
them
prepared
estimates.
for
Yeah.
the worst.
What I tell people, if they've not had a year where they owed yet, maybe just hold out 25% of the, or if it's gross, maybe even 15%, depending on your style of business, of what comes in. Just put it in a savings account and just say, hey, this, I might have to use this for taxes. Best case scenario, you don't, and you get to keep it. Worst case scenario, you've got it ready to go and you can pay it in. Okay, it's a good question though. Any other questions on self-employment tax? That is the one that really gets you guys. So the reason I bring all these taxes up, and the reason it's important to have this team of professionals, your lawyer, CPA, investment advisor, is back when we were talking about your entity and what your structure is, what kind of LLC, a corporation, what these are is they can help us to mitigate the taxes. Self-employment tax is kind of the first one that we have some control over. An S corporation it gets some of the benefits of a corporation, some of the benefits of a partnership. It's not for everybody because it does come with additional filing costs. You have to do payroll for yourself. You have to have a separate tax return. So you're looking at extra fees to whoever does your return. But usually our rule of thumb at the office is when you start profiting about $50,000, maybe we consider an S corporation, because an S corporation allows you to be an actual employee of your company, not just the owner, but an employee also with the W-2. And so when that happens, we can control what your self-employment tax is. You no longer have SE tax. Now you have Social Security and Medicare on your W-2, just like other employees. And it opens the door that if you're going to have payroll, have other employees, you already have it all set up, okay? Or maybe you already did have employees and it's easy to just go ahead and do the S Corp and put you in there as well. S Corps are a much deeper discussion, but that's kind of the general rule of thumb. Once you're looking at maybe 50,000 net profits, start to consider it, and you can at least control your taxes and smooth them out over the years. Okay. But again, the lawyer's gonna have a take on that, CPA's gonna have a take on that, and then maybe the investment guy, because that brings in investment vehicles that you can possibly use for the company to get more deductions and put more away for retirement. Other things that a CPA can do for you, or a tax professional, is really help you know what taxes need paid, when to pay them, how to pay them, make sure they're paid on time, because the IRS charges penalties and they don't stop till they get them if you do something wrong, and you may just not even know you did it wrong. But if you're working with someone that already knows that schedule and can help you with that, can take a load off of your mind. So are there any other questions about taxes in general? I'm gonna move on to bookkeeping, unless we've got any questions about taxes, and we're gonna get into income and deductions here in a moment. Okay, so bookkeeping. What is it? Why do we do it? Without taking you back to my accounting 101 class, I wanna give you just a brief overview. What is income? Somebody give me a definition here of what is income.
Money that is made.
Money that's, yes,
Earned.
made, earned, yes. So it's not necessarily every dollar deposited to your bank account, because you might have to get a loan. You might have had to put money in of your own personal money, just to keep the business moving. But it's every dollar that's earned from a sale or product, earned from services, okay? Income, sales, revenue, those are all the same thing, okay? What is a deduction?
Like
Expenses.
supplies that
Mhm.
you've bought, expenses to run the business.
Right, absolutely. And I get the question a lot, well, what can I deduct? I'm like, well, did you buy this for the business? Did you use it in the business? Yes, then you can deduct it. If you bought it for the business and you otherwise would not have bought that, like it's not a personal item, you bought it for the business and you're using it for the business, 99% of the time that's a tax deduction. And my talk today and everything is geared toward that tax return and geared toward minimizing your taxes. So there are some pretty common deductions, advertising will help you run your business. You wouldn't be paying for advertising just personally, right? That's for a business use. Advertising, costs of goods sold. So cost of goods sold is in retail or manufacturing. So your sales, and then what did you have to purchase that item for? That's your cost of goods sold. Other items could be, travel, interest, office supplies, and then the big one is payroll.
What about
If
like
you have to do payroll.
equipment?
Absolutely, yes, equipment. Again, anything that you bought for the business. There's a lot of different deductions we could do. Equipment is treated as an asset, but deducted as an expense, okay? And equipment's actually great because you can choose when to deduct it. You can deduct it first year, all in one, or you can spread it out over multiple years. What's that called? Depreciation, yes. So there are different tax rules of how far you can spread them out. But in general, 5 to 7 years, depending on what it is. Office equipment usually you get 3 years out of. But that, if you had a year where you had maybe a loss, or you didn't need the deduction, well, let's save it. Maybe next year we'll be able to use it. Now, you don't get the choice again next year to write the whole thing off. It's like you lock it in either the first year you write it off, or you're spreading it out, and you lock that in. One key point on that is if you sell that equipment and you already wrote it off, you have to claim it back as income. You have to recapture that depreciation. But that's okay. Maybe that year you also bought something brand new and you offset it. So that's a good concept though, is depreciation. Think about. Where are we getting the data for our bookkeeping? We're making a balance sheet, we're making a profit and loss, an income statement. Those are some terms maybe you've touched on since you've been even in these sessions. Where are we getting the data to build these?
Receipts?
Yeah.
Receipts. Any other? I'd go bank statements probably. Checks written. Even credit card statements if you're using a credit card. All of those are going to show us the information that you spent money on. And so here's where I'm going to give some of my biggest warnings, okay? Use the bank account. Do not use cash. Extremely untraceable, which some people think is a good thing, but in this section we can't see it to get the books done. You can deduct it. You legally can deduct it, but if you're under audit, how do you prove it?
Yeah.
So you have to have a signed written receipt. You maybe need to have a picture of an item that you sold or bought. It just gets complicated and tricky. You can definitely receive cash. Just take all that cash to the bank. Put it in the bank because that's what you need to pay taxes on. Okay? I would not stop people from paying you in cash ever. But I would try to avoid at all costs paying for anything in cash that you want to deduct. Okay? I know with equipment, potentially you want to get in an auction. A lot of them take checks. And that's okay, especially if it's a business check. Maybe it's the guy down the road and he won't take a check, he's only taking cash. Okay, let's get a picture, let's write out a bill of sale, let's get them to sign it. Like, I want you to take extra precautions, because in an audit, if you don't have all these bases checked, they just throw it out. You know, and if you spent $50,000 on a new piece of farm equipment and they throw it out, that's a big deal. You're gonna pay
Big
taxes
loss.
on it. So I would avoid cash if possible. I would run everything through the bank accounts. So the bank accounts, and this is gonna pull us back a little bit to our setup. Are you getting a bank account in your business name, your personal name? Who's the tax ID number?
Or business.
Business account, for sure. So when you're doing your setup, regardless of how you're doing it, you're likely gonna have a tax ID number, okay? There's an application, can be done online, an attorney can help, we can help with this, but you get that federal tax ID number. It's called an EIN or an FEIN sometimes. That's what the bank will want to put on your account. Then, once you have that, run every single thing through it. Try to avoid paying for things out of your personal account to deduct it later. That gets messy. And definitely don't pay for personal items out of the business account, okay? That actually can destroy your setup a little bit. You know, we talked about an LLC, limited liability company. Well, if you're paying for things out of your business account, you can actually pierce that protection, and you don't have that protection anymore, and someone could potentially, you know, bring a lawsuit against you personally because you were treating the bank account like your personal piggy bank. So isolate the accounts. That's from a legal standpoint, but also from your bookkeeping standpoint, it makes it so much easier for you, your bookkeeper, whoever's helping you with it. If you're like, yep, everything in there is business, that's easier. We don't have to try to figure out what you did 6 months ago or 10 months ago. And usually when we call our clients and it's that old, they don't know either. So that's one of the biggest key points of bookkeeping, is make sure that it's isolated, okay? Now, I mentioned a few forms a second ago, a few reports, balance sheet, profit and loss. Do we know what those are? Have we kind of covered that? So what's a balance sheet in your head?
Well, now you put me on the spot, but we covered it last week.
What's our equation? We got an equation, right?
Oh, gosh, and I'm sitting right here next to her.
I told you, it was a ton of information.
Yeah. I know that there's assets and
There you go.
liabilities.
There you go. What's the E?
Expenses.
Nope.
Oh, equity.
Equity, right. So our assets equals liabilities plus equity. What are some assets that might show up on our
Building.
balance sheet? What's that?
Building,
A building, sure, yes. Cash in the bank, that's an asset. Maybe a
product
vehicle.
on the, like, not product on the shelf, but,
You're right, though. What's the name
Warrant.
for it?
Inventory.
Inventory. There you go.
yes,
Inventory is
there
an asset. Maybe you have a vehicle for the business or other equipment that you're writing off over time. We'll list that as those as assets. All right, so what's a liability?
What you owe is still.
What you owe, yep, against anything, right? So it may be specifically to a vehicle, it may be a business loan that you got to get started, it may
a
be
vendor,
a vendor, potentially, it's accounts payable, yes. It may be $10,000 that your mom gave you to get your business going, you know. It may be to you, because the business was struggling cash flow wise and you put in some money to keep it moving. So those are liabilities. And then what's equity? There's actually a better way to write this equation. I never really liked it that way. This one makes more sense.
equity is like the net profit.
Net worth,
Net worth.
actually. Net profit will be on the other statement, but this is what that business is worth. Okay, you got money in the bank, you have vehicles, you have a building, you owe some money against the building and the vehicle. You don't owe against your cash in the bank because, so what's that business worth on paper? That's the equity in the business, or the net worth of the business, okay? So that's our balance sheet. Now what's a profit and loss / income statement? Those mean the same thing. So what is that? This is the important one, because this is what we're gonna pay taxes on. It's gonna show our net profits. So it's the incomes minus cost of goods sold if you have it, minus all of the administration expenses, okay? Cost of goods sold, like we talked about, specifically what did I pay for, let's say I'm selling t-shirts. I paid $5 for the t-shirt, sold it for 10. Cost of goods sold is 5, income is 10, okay? Then we have general and administration expenses. That is what you pay for rent in your building, utilities, what advertising, things that you can't specifically tag to the item that was sold. Service industries don't really have cost of goods sold, right? They just, you have the income that you did as a service, and then everything else is administrative because you provided the service or you physically did it. So our profit and loss, we're gonna have income minus cost of goods sold minus general admin expenses equals, and what's this bottom equal?
Net profit.
Net profit, yes. Why is net profit important?
Is that what you pay taxes on?
That's what we pay taxes on. Is this our star student over here? That's what we pay taxes on. It's almost a catch-22. You wanna make as much money as possible, but we wanna show as little money as possible for our tax return. It's, there's a lot of different ways that we can do it, but end of the day, this is the most important number. This actually flows over to the equity side on our balance sheet, but it's getting into some more in-depth concepts there, so we don't have to go that far. Net profits tell us how we did that year, or that month, or that period, and they allow us to make decisions on what to do next. Sometimes using the percentage of these on income can help us know where to cut costs, where to maybe increase costs if we think it was helping. Maybe you spent $5,000 on advertising one month, but your income stayed the same. Maybe it didn't work. Maybe the newspaper didn't work anymore. Maybe you did a Facebook ad and you didn't see any increased sales over the next 3 months. Okay, well, we learned from that. Okay, but the income statement is really important to show us what happened that period and to help us to plan for our taxes. Okay, we talked about you had the vehicles and the buildings over on the asset, so that was on the balance sheet. It's a whole separate report. Over here is where depreciation would go. So what's being written off for that year? So that would be on this side of it. Okay? Any questions on any of these terms? What net profit is? Why bookkeeping is important? Should we use cash? Should we not use cash? I need unanimous on this. Should we use cash?
Yes.
Yeah. No.
I thought, I meant in.
Receive it.
Receive it, sure, yeah. Never turn down money, but try to, everything you spend out, make it trackable for your own sake and in the event of an audit. So we make everything we spend out trackable as much as possible. Okay? So anything else we want to hit here? The goal with bookkeeping, from your standpoint, is to learn how it did, but to minimize your tax and to plan for your tax and know what's coming. So we suggest doing either monthly bookkeeping, quarterly bookkeeping. At minimum, you have to do it once a year because that's when your tax returns due. And if you're able to do it on your own, there are programs that you can work with. A lot of them use some artificial intelligence anymore, and so it's getting easier. But if it's just, you don't want to mess with it, don't want to deal with it, work with a place like a CPA firm or bookkeeping office. Let them help you keep up to speed and keep up to date. Okay, now we'll kind of move away from some tax topics unless we have any questions. Got some good interaction so far. So are there any specific questions that have been burning on you a little bit about taxes or about bookkeeping? Okay, I want to talk about just the small business in general. So like I mentioned when I was in my introduction, I've had the CPA firm for 10 years. I ran a small CPA firm as an employee for 7 years before that. Worked with many small business owners, watched many start, be super excited, get going really fast, and something happened and then they give up. Or I've watched them grow really big and then diversify and get bigger. And so I've seen successes, failures. I've had my own successes and failures. I learned quite a bit through the process. I've also had 3 kids during this past 10 years, 11 years, and seen how my starting a business affected the rest of my life. And so that's some things I want to touch on with you here right now. So the big one is, what is your role at your small business? Okay, I would imagine most people are coming to a small business from a W-2 job, okay? You've been working week to week, you get a paycheck, you get to leave at 5 or 6 maybe, clock out, forget about work for the weekend, go home, enjoy your weekend. 9 o'clock comes on Monday, okay, we'll go and do it again. But it's nice, you got that paycheck, you got the time off, you got to clean your mind of things that were happening at work. You know, I know sometimes it carries over, but it's really not your job to worry about it. Sometimes it's the boss's job, right? Now you're the boss. Okay, so what's your role now? Well, let's say you got a great idea, and I'm sure you guys do have great ideas, and you're excited about what you're going to do next. And so you get in there and you want to do it. Well, then we also have, who's going to answer the phone? Who's the receptionist? You are. Who's going to negotiate with contractors? Who's going to worry about the paperwork? You are. Who's going to pick up supplies and be running around getting things that are needed, even if it's small? You are. Who's doing the bookkeeping, paying the bills, sending out invoices, all the book work? You are. So who's taking out the trash? Who's mowing the yard? Who's cleaning the office? You are. Unless you get to a point where you can start paying people to do those things for you, you're now doing all of that, then in hopes that you can actually do the real job that you're doing with the leftover time. So those are all in your spare time. Then you actually have to do the work to make the money. And that's the fun part. That's what you wanted to do. That's your dream. That's where you thought you'd have some freedom. But the reality is, once you get in, you gotta cover all these bases too. So a lot of people have home-based jobs now. Some of these things don't come into play, and that's good. But there are a lot of different hats that you start to wear. The reason I want to talk about this is because that can start to wear on people. It can deflate people. It can make them be like, why did I leave my nice, safe job and give me a paycheck every week? Because I haven't even got to a paycheck yet. You don't get a paycheck. You have to make the money, pay for the expenses, and hope there's money left over for you. If you get to a point where now you have employees, okay, they definitely want paid. So now we're at make the money, spend the bills, pay the employees, then hope there's money left over for you. So I don't bring this up to scare you. I bring this up so you can see it coming and you can understand, okay, I need to have a plan for this. I need to make sure that we've talked to the right people, we've got our stuff set up correctly so that this is going to be a success. So one of the things that we do at our office is we coach a lot of small, brand new business owners, medium business owners with experience, and long-term business owners. Because once you get into that world, it can also become very lonely. You know, you're not reliant on your workers at your job anymore. Now it's all on you. Everything falls on you. And if you want to progress forward, you have to address problems that come up as they come. So what we'll do is we can come in and we can be part of our business coaching plan, and we can assist you with, how do I get started with this? How do I hire somebody? How do I start payroll? What do I advertise? Where should I advertise? We'll really get into some of the how-tos so that you can ask specific questions to the specific problems that you're having and help you to move your business forward to be profitable and to hopefully take some of that burden off of your mind of not knowing what to do. That kind of leads me to what I've learned the most and learned most recently is trying to maintain some sort of life balance. Even as an employee, that's become difficult lately. I mean, corporations demand more of our employees all the time. People are working more hours. But once you become a small business owner, it's all you all the time. And you want your business to succeed. You want it to propel forward. So sure, you're working till 9 o'clock at night. You're working on the weekends. Maybe the very next week, you're seeing that, I need to generate some money now just to cover next week's payroll or to cover next week's rent that's coming out once a month. So you're putting in the extra time. What that does to your personal life can be devastating. It can take away time that you don't want to miss with your kids. So what I have learned over my time doing this, and I've had many ups, many downs. I have worked very hard, but even just recently, I've come to realize if my priorities in life aren't in line, this will be a failure, and it needs to not happen. So if you know that it's gonna happen, and if you can put parameters in your life, take care of yourself, priorities are set in life so that you can devote the right time to the right activities. In my life, that is, I gotta get myself right with God. I have to keep my focus where it should be, because this life is business, the next life is different. My family, I have to make sure my family gets my attention some. Like I said, 3 kids, 11 and under. So there's a lot going on and I can't be at everything, but it's important that they know you care. It's important to be attentive. It's important to be at home for dinner as many times as you can. So as long as you don't lose sight of it, you will do it. Also self-care. That seems to be what everybody puts on the back burner, is self-care. You know, make sure you're working out, make sure you're reading books, make sure you're taking care of yourself and focusing on yourself so that you can focus on other things. That hit me the hardest just a few years ago. I really wasn't taking care of myself. And to me, that was bringing me down, bringing the business down, bringing the family down. So once I started focusing on that, I could actually propel everything else forward. It also helps with your attitude and your positivity, because you have to be your own cheerleader. And this, you know, I'm blessed with very loyal and passionate employees, and they believe in what we're doing. But you're not always. Sometimes they don't. They just want that paycheck. And if you know, they don't like a decision you made, maybe they just leave, and then it's back on you, and you got to figure it out all over again. You're back to the beginning. Work is one of the priorities. It has to be, but it has to be in control. Another one of the priorities that I have is charity. I want to do things, and from a business perspective, especially a small business owner, they will tell you it's some of the best advertising. It really is, and it's good to do good works. It's good to be part of your community, but you do have to keep it in check, because that is free. You're giving them your time for free, and as a small business owner now, your time is much more limited because you need to devote it on many things. So 10 years ago when I started back up, I got into every club in town thinking, hey, this is gonna be great. We're gonna do good stuff. I'm gonna help take care of my community. Well, now I'm in 7 towns and I just can't personally do it. So I have to limit, I have to hire good people. I've got Melanie, I've got Kate, I've got other good people in my firm, and they get involved as well. So it is good advertising, but you have to keep it in check. As an accountant, every group I join wants me to be the treasurer. Of course they do. they want a free CPA level style of bookkeeping. I've actually, I will tell them immediately, I won't be the treasurer, because not because of any conflict or anything like that. It's just I can't devote that much time to this, but I want to be involved. So my takeaway here is that here at my firm, we have actually implemented some things to make sure my employees are taking care of themselves. We've actually stepped back to a 32-hour work week at the offices. So 40-hour work week just doesn't exist for us anymore. During tax season, they work a little extra, but they take a lot of time off the rest of the year, which is good. But I want our families, I want people that work for me to also enjoy their families and to have a good balance in their life. And I'm coming at that from the lessons I've learned just from being a small business owner. I'll tell you, where 10 years ago is when I started, I still feel like a small business owner. I still feel like I'm just starting. I still feel like there's so much more to do. Size doesn't really matter that much when you're going to grow and you're going to have something big. You want to continue the path that you started, okay? And I think some people that if you get into something and it's going to be your life, you can miss a lot if you make that your primary focus and you put everything else to the side. So that's my talk on that. Like I said, at the firm, I work with people one-on-one with business coaching. We definitely do bookkeeping and tax returns. And we are getting into some other things that are exciting too, coming up soon. But our card's over there. If you guys wanted to talk to us later, that'd be just fine. And we do have an office here in town over on Main Street, kind of at the butt end of Main Street over by the bank. Any other questions right now before I kind of wrap up? All right. Thank you guys so much for your attention. I appreciate it, and I'm glad to be here.
Thank you.
Thank you.
stretch a minute, take a break. Elizabeth